Welcome everyone, and thanks for giving us part of your day today. My name is Dan Gramza. In cooperation with NinjaTrader, Dorman Trading, and Eurex, we'd like to review currency reactions surrounding the historic Brexit developments, highlight potential future impact levels in the global foreign exchange markets, and introduce you to a unique new tool. It now provides one of the most efficient routes to trade foreign exchange, Eurex's new rolling spot FX futures. Before we get started, I need to mention the content in this presentation is for educational and informational purposes only. There is no offer or recommendation to buy or sell any security, and no information contained here should be interpreted or construed as investment advice. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more of their initial investment. Risk capital is the money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of futures results, and no portion of this presentation can be reproduced or without written permission of the authors. My background is I come from the floors in Chicago. I've had a chance I started with stock options and then switched to futures, and I have a chance to share ideas with traders around the globe a couple times a year. And I'm really excited about you and I exploring today what's happening in these markets and also this new product line that I think is incredibly exciting. Well, let's get started. You know, in recent years, Eurex parent, that's the Deutsche Börse group, aggressively expanded into a whole new asset class and quietly established a massive footprint in foreign exchange, launching a wide variety of complementary trading and clearing services across both the exchange-traded and the OTC/FX spaces. Multiple trading models with huge depth and breadth across FX that does not exist anywhere else in comparison. Truly established as one of the world's most comprehensive FX hubs, enabling a cascade of FX flows across platforms they operate. There's a lot going on in this picture, but the takeaway today is that the Deutsche Börse's extensive FX footprint now includes the launch of a full suite of exchange-traded FX Eurex derivatives, the most innovative of which is listed in the upper left-hand side of this slide. And our product focus today, the Eurex Rolling Spot FX Futures. You know, there's often a high degree of hype surrounding the launch of a new futures product. Well, in this case, it is well justified to recognize that Eurex has come up with a genuinely innovative new FX futures product unlike anything presently available, the Rolling Spot FX Future. Essentially, it's the OTC FX spot price and a daily futures wrapper. So since this concept is brand new, let's briefly review some of the relevant details about Eurex Rolling Spot FX Futures. Well, first, what are they? They are an innovative new tool with a clever rollover mechanism built in, proposed as an alternative to trade OTC FX spot rate exposure in a futures contract at a true exchange. These are non-deliverable, cash-settled daily futures contracts. They are essentially a perpetual daily futures contract with no expiration date. At all times, this product reflects the spot price in a futures wrapper. So why use them? For the first time, there is finally an exchange-hosted product that allows anyone to efficiently hedge, trade a spot OTC FX exposure in a futures wrapper. You can trade bespoke to any value date without any ongoing efforts. They are very cost-effective. They're unique compared to previous routes for trading and carrying an FX exposure to any value date. Here, everybody faces the same neutral and transparent end-of-day midpoint price for rolling any open positions one day forward. There is no traditional markup. Both the smallest and the largest OTC FX participants are now on a transparent and level playing field. So, how to use them? Open a long or short rolling spot FX futures position, but flatten that position intraday, and there is simply a cash-settled P&L exercise. However, if you keep a position open until the end of day in Europe, then all long and short positions are automatically rolled one day forward at a neutral midpoint. And you will now own that rolling spot FX futures for one more day. This process repeats indefinitely at the end of each day, meaning that a Eurex rolling spot futures is essentially a perpetual contract. Once you open it, you never have to worry about your holding time period. It is effortless and cost-effective route for you to maintain spot FX exposure for one day, 1 week, 1 month, or beyond. Briefly diving into the product specs. Eurex rolling spot FX futures are designed to align with the dominant OTC FX market. Round-the-clock accessibility, Sunday to Friday, 23 hours, 5 days access. All products are quoted in the familiar OTC FX convention, commanding a standard notational size of 100,000 of the first currency listed in the pair. Trading is currently offered in 7 major currencies, creating 12 unique cash-settled rolling spot futures pairs. Minimum tick size mimics the OTC FX market. So for example, the euro dollar trades out to the 5th decimal place and trades in 1/10 of a pip. In other words, 1.13012. Thus, each minimum tick movement in the euro dollar is $1. With regards to expiration dates, well, there are no expiration dates. Buy and hold as long as you want. Any open, long, or short position at end of day remains perpetually open until you flatten. Now, we understand what rolling spot benefits are. Let's take a look at some futures ways to use these markets. Brexit is creating uncertainty. And as we know, uncertainty creates opportunity. Many currency pairs are moving around the Brexit developments, but let's focus on one of the most popular accessible currency pairs, and that's the euro dollar, which normally has a very deep liquidity around the clock and is likely to remain a significant Brexit focus. So let's review where euro dollar currency pair was in front of and during the Brexit vote. Where has it moved since? And the breakout and target levels where the euro dollar might potentially move towards depending on the Brexit developments. We'll take a look at this via a series of monthly, weekly, daily, hourly euro dollar charts. So here, what you're looking at is a 30-minute chart of the Brexit vote on June 23, 2016, where the euro dollar moved in a range from a 114.24 high to a 109.12 low, over a 500-point range, or 5 big figures if you want to use FX terminology, or 5 cents. And what you're seeing also when you look at this chart is you're seeing what I think of when I think about a 24-hour market, and that is it's broken down by time zone. I live in Chicago. I get to see how Asia's absorbing information. I get to see how Europe is bringing information to me. And what did we see on the Brexit vote? And that's what you're seeing there. Those candles are moving up towards that big move. That's what was happening on the day of the vote. They're still accumulating the vote. And when they got the results, it occurred in the Asian time zone. This allows us to see and hopefully trade that opportunity or to manage our risk. So considering the magnitude and future unknown implications of Brexit, this isn't so much of a surprise. What might be a surprise, though, is where the euro-dollar pair has moved since the vote. It's been coiling and clearly preparing for breakouts in the larger to longer-term moves. So let's take a look at that longer-term chart And before we do that, I'd just like to talk to you about what I call behavioral Japanese candle charts. And I'm sure a lot of you are familiar with candle charts. This is something that I've been looking at since the mid-'80s. I learned this in Tokyo at Bank of America, and I've modified it because of my floor background. So here's what I'd like you to think about. When you have the closing price above the opening price, they draw a box between the open and close. I think that represents buyers coming into the market. And I think it's just the opposite on the other side. I think it represents sellers when the close is below the open. Here the high and low match the top and bottom of the candle. When the high is above the body of the candle, that vertical line called the shadow, I think represents sellers. And just the opposite on the downside. When that vertical line on the bottom, when that low is below the bodies of the candles, I think that represents buyers. Now, what you want to think about as we start going through these charts is where do you see those shadows? How big are those bodies? Are the bodies getting bigger? Are the bodies getting smaller? And are the shadows on the top, which imply selling, or are the shadows on the bottom, which imply buying? Now, let's do this. Let's move ahead and let's take a look at a monthly chart. Looking at this chart without knowing the exact date of the vote, it might be hard to pick out which candle was actually the Brexit month, since it does not jump out at us compared to other months. Well, that month is right here. It's that June. And look at that movement. It tells us a few things. One, there's a lot of movement in this marketplace, which means there's a lot of opportunity in this marketplace. So that was the Brexit month. Now, even with this historic vote, many of the months leading up to the Brexit and many of the months following have seen equal or wider ranges to what you're seeing in that month. So it does show that there was market uncertainty, but still no clear direction for long term. We've tested some very old lows here, and that's around 103.52. It's a level we haven't seen since 2002. But the euro-dollar market reversed higher without enough certainty to break down towards par. Then over the next 1.5 years, the euro-dollar found strength and made repeated attempts towards the 125 handle, and then failed, and then came back to mid-range here, and it's coiled where we sit now. So stepping a little closer with weekly charts, I want to emphasize that what you see in this chart is not what the chart showed us immediately following Brexit, but what they're telling us now. The week of the Brexit saw the euro-dollar establish a high that held for quite some time around 114.26. What you can't see on the left of this chart is that the failed attempts to take out that 114.26 high. In the weeks following the Brexit vote, euro-dollar tried and failed repeatedly to go higher. And then eventually it collapsed and went as low as 103.52, as we just looked at on the monthlies, where there was a lot of uncertainty in a long-term support level. This is where we start seeing the strengthening of the euro-dollar, finally taking out that 114.26 and eventually moving as high around 125.57. There has been a lot of repeated attempts at this 125.57 highs, and then, just like at the lows, reversed and moved to that mid-range holding pattern. So now we see this coiling analogy again on the weeklies becoming abnormally tight the closer we get to a final impending Brexit decision. So although we might not know when the Brexit or a breakout will happen, it is important to note that when we do break out, the market is telling us that there may be considerable room to run. It is only to test the recent medium-term highs or lows that we see here. This coiling is rare. So when we spring away, there is opportunity to hopefully ride that wave. Moving closer now to a daily chart. We have to emphasize this point again, coiling on the daily charts. Building up of energy for a move. Look at the consolidation the most recent 6 months leading right up to the end of the final decision, which is going to be coming. One would expect that we'd see a lot of flailing and uncertainty we've seen just the exact opposite. In fact, the euro-dollar average ranges since Brexit have become tighter as the market coils and awaits more certainty, I should say. No one is certain, and thus we sit in a temporary limbo state. But considering the medium-term highs and lows we just referenced in the monthlies and weeklies, it appears that when we do finally exit this consolidation phase, either up or down, the daily technicals lend themselves to a nice breakout. We are at uncertain mid-range here when you look at the chart. So the takeaway is be prepared. Pay attention to that 13.5 level or 114, 115 to the upside. And on the bearish side, that 112.80 and 112 even could be significant levels to pay attention to. Let's move to an intraday chart. And what you're seeing here is opportunity. I wanted you to see this, but you can see there's tremendous movement in this market. We may see the coiling on the daily chart, but the fact is intraday, this market is still showing us opportunity. Well, we hope everyone found value in digging deeper into important currency levels that you should keep on your trading radar around the Brexit. And further, that you consider taking a closer look at the product simplicity and unsurpassed benefits of trading Eurex's new rolling spot FX futures. They offer one of the most innovative, fair, and cost-effective means to access the OTC FX market during these turbulent times. If you'd like any additional information regarding rolling spot futures product specs or would like to obtain access to trade Eurex's new rolling spot FX futures via NinjaTrader and Dorman, then please feel free to reach out to your local representatives. Thanks for taking time to join us today.